Hey, it's Soleil, and this is episode 62 of the Red Pilled Orange Pill Investor. May as well start out with an update on the 5K account challenge. It is down 10% from yesterday, so I guess I have to just quit and start over since it's a complete failure already. That was sarcasm. This is to be expected. You got to get in somewhere. So when you open an account, you get into something. Now you can set a limit order, whatever. If I wanted to yesterday, I could have said, "Oh, I don't want to buy Mara unless it's $20." That's fine. You could do that. The problem is, what if it doesn't ever go down to 20? And you never get a fill, and you're sitting there with 5K in cash. So you have to get off zero. You got to buy something. And this is kind of the point. So if someone purchased 100 shares at the same time I did and got them for $23.08, just like I did, and they did not immediately sell this covered call and get paid $1.02 here, which dropped my cost basis down to 22, and didn't sell this one for 86 and dropped my cost basis down to 21.20, they would be down the full amount. However, I reduced my cost basis, so I am not as down as far as I would be if I was just a buy and hold. If I was a buy and hold robot. So that is the point. So, I'd be lying if I said, oh yeah, I woke up this morning and I'm glad it's down 10%. No, I want it to be up every day. I want it to be up every second. I'll always want it to be up. However, it is a good lesson. And the down plan is the same as the up plan. It's just about, this strategy is just about reducing cost basis. And the other point is you're not really down until you sell. Or you didn't really lose money until you sell. And it's the same way with banking some profits. You're not really up until you sell. And that's one thing that, selling a put or selling a covered call does, is it puts money in your pocket. So I always look at the cost of my shares as being X. And the cost, so for me, the only thing that ever changes is the number of shares that I have. But the value of those shares is just X forever. If my shares drop to $10 or go up to 50, to me it doesn't really matter, because I'm going to sell a covered call again next week and collect 1, 2, 3, 4%. And that percent is going to be of X, which is whatever the value is. And that premium will allow me to purchase more shares. And regardless of the price of your stock, if you get 1% of X, you're going to have enough premium to buy one more share. 1% of 100 is, if you have 100 shares of $1 stock and you get 1%, that means you earned $1. And you can buy one more dollar stock. If your shares cost 100 and 100 shares cost 1,000, 10,000, then 1% of that is going to be $100, and you can buy one more share of your $100 stock. So it's not that I don't care what the price of the stock is, because I always care. I'm always looking. I can't help myself. But in the long run, it really doesn't matter. So this is a long-term investing strategy with some short-term, profit taking, but always reinvesting. So, HUT is down, 40 cents. So, maybe I'll buy 10 shares. I'm just going to buy at the market price. So now my average purchase price went down from 750, was it 756? No, to 754. Plus I got paid 58 cents times 100 is 58 bucks. So really, my cost basis is under 7. So technically, I'm still, ahead of the game because I've mitigated some of this loss with collecting premium. Now, if this rockets back up to $8, then I would break even on this one. But if it rockets up to $8.50, then yeah, anything between my strike and the $8.50, I would not capitalize on. I would not make that money. And if I wanted to keep these shares, I would actually have to pay the $50 to roll to next week, or I could just let the shares be called away. That's perfectly fine. The wheel strategy is to just this is actually the second half of the wheel strategy. I just kind of skipped the first half. It basically works out to amounts to the same thing. But if you want to do the wheel, you could sell a put here for 7, or maybe if we had sold a put for 750 yesterday when the price was over 750, we would have gotten paid 50 cents or whatever. I don't know, 38. Well, probably similar to what I paid on the covered call. And then by Friday, if the price dropped below our strike price, we would actually be forced to purchase these shares for 750. And if the price was 715, yes, your account value would go down 35 cents. But if you got paid 30, you're only down a nickel. So again, that's what this strategy is all about. It's about taking incremental profits, and most people can't time the market. But most people, and really, I don't think anyone can. If they can, they're probably hoarding that secret for themselves. But the beauty of this is you're just robotically, mechanically, with no emotion, choosing where you would take profits from. And you're always you're always going to be choosing a number that benefits you, which is above where the price is now, and hopefully above your cost basis. And I don't really even know much technical analysis. The extent of my technical analysis is like looking to see if we are in a bull or a bear market. If the SPY has gone into a death cross or something, then I want to at least know that I'm in a bear market. And if we have a golden cross, I want to at least know that we're in a bull market. It doesn't mean that something can't reverse, or it doesn't mean we won't have a black swan event and everything crashes. However, it is good to know your general trading environment. You can just go to the SPY as well and see, okay, the SPY's up 1% today, which usually when the SPY's up, the tech stocks are up even a little bit more. So that's annoying that the SPY is up and the Bitcoin stocks are not, even though Bitcoin, hit some all-time highs. I guess it's down in the $1,000 or whatever. Oh, actually, I guess it went down to 69 overnight. Oh, an hour ago? Okay. But that should be expected as well. And that's why I didn't want to burn up all of my margin using too much margin. I mean, Bitcoin can drop to 45 in the blink of an eye. So support, big time support is right here at 50. So this is the extent of my technical analysis, I suppose. Stephen Mark Ryan that I follow, he pretty much calls this technical analysis, like reading tea leaves or astrology, astrology for finance. But I've seen it 100 times where Bitcoin will suddenly crash through support and then bounce back to support. So, I mean, if support is 50 and it crashes 20% below that, it could go to 42 and then probably snap back to 50. Um, but that's how Bitcoin works. So we got this pump from, actually it was down here at 15, but let's just say 25. So it's almost tripled. If we call triple, like, or back from like 20-ish when it was here at 22. Yeah, so it's basically tripled in a year. Without much of a pullback. What? So it went to 30 and pulled back to 25. And I don't know if the institutional money that's been pouring in with these ETFs, I don't know if that's preventing these dips from really doing much. Like it dipped from 68 to 63. Like I'm sure that freaked the newbies out, but that's like nothing. So if Bitcoin dropped from 70 to 42, I would not be surprised, number one, and worried, number two. That just that's just how it is. Um, you know, back here it went from 60 to 34, so almost in half. And then from 63 down by 2/3, a little pump, and then it went all the way down to 16. So this is like, what is that, a 75% crash? I mean, it took a while to get there, November 2021 to December 2022. But that's why, I consider myself a Bitcoiner. But maybe some people wouldn't give me credit for being a maximalist because, for me, when we went into let's see, this is going to be the 2025 bull market, as far as I can tell. So 2021 minus 4 years, 2017. So going into this 2021 bull market, people say, especially Michael Saylor, who is uh, probably the best educator in the Bitcoin space, and I've tried to listen to every interview that I can. But if you bought in here, even if you caught some FOMO and you didn't buy at 10, but you're like, oh, let me get in here at 20. Anywhere between December 2020, if you sold for profit from December 2020 all the way to May of 2022, a full year to get to here, and then another 5-6 months, you could have still sold for 50% profit. Like if you watched it go all the way up here, and you're like, oh, I missed the top. Everybody missed the freaking top. The only people who didn't miss the top are the people who bought it here and crapped themselves when it dropped to 15. But I mean, you could have sold for profit anywhere during this year and a half and still been able to buy cheaper if you waited another 6 months just for the bottom of the bear market. So, uh, I, when I'm posting on X, I'm definitely a maximalist. I think anyone who can buy and hold and keep it in cold storage should do so. And if you can figure out a way to just never sell, and eventually, when there's sophisticated loan products, just borrow against it, and and then when it's time to pay it off again, it'll just be worth more, and you just borrow against it again, and maybe you just never sell, unless there's an emergency. But yeah, you're not gonna this series. You're not gonna see any technical analysis whatsoever. That is not gonna happen. Um, I don't necessarily buy it, other than just a rudimentary understanding, so that you at least know what other people are thinking. There's a good book called Trade the Trader, and he basically says that you have to know the skills that everyone else is using at least as well as they do, because then you can understand what they're going to do. So if they see head and shoulders, blah blah blah, then you should be prepared for it to go down if it goes down, or everyone anticipates it to go down, so then they all start selling, and then somebody else thinks that's value and they start buying. It's To me, it's just really just a crapshoot. So I don't really have time for all of that crap. Even if I was a day trader, I wouldn't be bothered. Um, I probably will be adding to this strategy some, maybe a little like trend following, so like some momentum trading. Um, but this is a minimalist strategy as well. So I've done hundreds of hours of research listening to people way smarter than me at 2x on YouTube videos explaining Bitcoin. So I became convinced. I've listened to hundreds of hours of people talking about Tesla. So I'm convinced. So those are the two assets that, as far as I can tell, have won the decade and are disrupting their industries. Bitcoin is disrupting the financial networks, and Tesla is disrupting the automotive, uh, electrical, power, humanoid robot, AI, what the hell else? Just basically disrupting uh, maybe tech, period. So those are the two assets that I invest in, and I'm not gonna, you know, I don't want to waste any more of my life than I have to deciding what to buy. Now I'll also have my falsification criteria ready. So if something fundamental changed with Bitcoin, maybe uh, some idiots were able to convince the consensus to start using a proof of stake or something. Um, I mean, I would just start running my own node, and I guess I would just refuse to use that node. But I guess if more than 50% of the people did, that would kind of be the dominant fork. Um, but yeah, I mean, if there was some kind of weird existential threat for Bitcoin that popped up, I would change my opinion. And if I don't even think if Elon Musk stepped down or anything happened to him, I think Tesla would probably be able to coast at this point because they've already inherited his work ethic and drive and process of no process, I guess. And so I think they would be fine. There might be like a temporary buying opportunity there, but that wouldn't necessarily change my opinion of Tesla. Something else fundamental would have to happen. Um, I mean, the entire oil industry and most of the government is already against him. So if he succeeded in the face of that, um, you know, now that he owns X and people can get a fair shot on social media. Um, yeah, I don't really see any existential threats really for Tesla. So every dip is a buying opportunity, in my opinion, there as well for the next 10 years. Um, yeah, it was down. So on my other account, I had to transfer most of my value from this account to get it down to 5 grand. But I'll deposit that into my other account, and we'll see if I want to discuss the trades over there as well. I mean, I basically just have MicroStrategy, Tesla, Mara, and occasionally Riot and Hut. So business as usual, really. All right, I think that's a good update for now. I don't want to burn up too much of this buying power because if Bitcoin does crash from 70 to 40, I have a sneaky suspicion that this buying power is going to evaporate. So I don't want to risk getting margin called on this account. If I was to have to deposit some money to save the account, that's kind of not the point. The point is to to grow this to 25K, not show people how to blow up their accounts using margin. But if I blow up this account using margin, then maybe that'll at least be a cautionary tale for others uh, not to buy Bitcoin mining stocks when Bitcoin's at an all-time high. But like I said, you got to get off zero. You know, you're going to start trading, you got to get in somewhere. So I could have been safer with this. I could have turned margin off. And that's maybe a good point. So if you don't want your account to get blown up, you can just not use margin. I mean, you can go into your account and turn margin off. And at that point, if you own shares, you can never be completely blown up as long as your shares don't go to zero. And like I said, I don't see any existential threats for Bitcoin, but that doesn't mean that there aren't any existential threats for these mining companies. And that's kind of the reason why Bitcoiners and maximalists will say just own Bitcoin because there's no third-party risk. So by owning stocks, period, you're exposing yourself to the risk of the CEOs of these companies, to bad earnings reports, to not managing their equipment properly, and maybe a fire takes out half their miners. So those are extra risks in these mining stocks that do not exist in Bitcoin. So if you can handle the tech part and the self-custody and the volatility of Bitcoin, that to me is always the safest route. Which reminds me, so there's a guy on X, and he likes to post little what ifs, for the Bitcoin crowd. And one of them was, if your parents have 250 grand and they want to get, they don't want to miss out on Bitcoin, what would you have them do? Just all in on Bitcoin, or put it into a CD or something weird like that. Well, weird. I mean, that's normal. That's normie talk. But some of the comments are funny because one would be like, "Oh, I wouldn't do anything risky like Bitcoin," but with hyperinflation, the riskiest thing you can do is sit on cash. I mean, that's guaranteed. If inflation is 15%, then that means 100 grand is worth 85 next year. I mean, it still says 100 in your bank account. It still says 1 with 5 zeros after it, but you can only buy 85 grand worth of stuff. And then the next year you're going to lose whatever, 15% off 85 grand. So another 12. So you're at 73. And then in 3 years, you're going to lose another 11 or 12. You're down to 60. So what, 5 years, you're going to lose at least half of your buying power. So I just think that's kind of hilarious that people think that Bitcoin is risky when the riskiest thing you can do, and it's not even a risk, it's just the guarantee of what is going to happen to your money. It will be devalued by inflation. And some people are going to maybe say, but isn't the CPI 5% or 3%? I don't give a damn what the CPI says. The government is full of shit. And people say, oh, well, I can get 10 or 15% or whatever the hell it is in the SPY, and inflation is only whatever the CPI is. No. Whatever you're getting in the SPY, that is inflation. You don't need to do any calculations for what inflation is. So if the SPY is up 35% in the past year, then inflation is 35%. I don't give a damn what the price of Papa John's is. You're not supposed to eat Papa John's. I like Papa John's, and I will eat it, but you're not supposed to eat it. You're not. You're supposed to. Well, anyway, um, I don't want to let too much out of the bag, and I'm trying to eat more carnivore diet type of stuff, but you're definitely not supposed to be eating tons of processed shit. So the stuff that they include in the CPI is whatever they can get their hands on to justify what's the prices that are not going up. So the prices of ground up flour and corn and cheap chemicals is not going up. but everybody wants to SPY. So it's going up. It's a desirable asset. So the real inflation rate is 35 frickin' percent. Inflation, well, and that's just this year. I mean, it does average out. So am I saying that the inflation rate was negative here? No, but on average. So really, 35% is probably unfair. But in 5 years, is that 87%? Yeah, that's the inflation rate. So whatever that is divided by 5, that's that's what you can say inflation is. Probably 10-15%. Anyway, enough of that. The down plan is the same as the up plan. If this expires where it is today, I'll be selling $22 calls for next week in Mara, which if they do get called away, that would probably be around a break-in. I'll be selling like $7.50 or $8 calls again on HUT. Yeah. Now you're like, oh, well, if I sell the 22, won't I be losing money? No, because I got paid like $1 on this, so I'd probably be breaking even, and that's fine. Some people get too scared, like, oh, I don't want to sell a covered call below my average cost or my cost basis or whatever. I'm afraid to lose money. And I'm like, if you're afraid to lose money, then you know, get the hell out of the stock market, because you can buy stock and it can go down just like it did. I bought stock and within 24 hours it immediately went down. That's just how the stock market works. But people, are afraid to set these strikes at or below their purchase price because they're afraid to lose money. But I don't really see that much different than other people setting stop loss orders. If their assumptions are incorrect and they realize that they're incorrect because they thought the stock was going to go up that day and it went down, and they're willing to take a small 10% loss to prevent a 20% loss, that's fine. But like I said, I don't really trade on that short-term philosophy. This is years-long investment. In order to go from 5K to 25K, I mean, this could take a couple of years. I don't think it's unreasonable to expect, honestly, 50% returns each year. So this might take a while. I'm not promising overnight success, but anybody that does is probably selling you snake oil or whatever. And I guess I can steal a line from Alex Hormozy, who's a pretty good business social media personality. What does he say? I'm Alex Hormozy and I have nothing to sell you, some shit like that. And so I don't have anything to sell either. I don't plan to, but you never know. I was actually asked once. I used to do spaces on Clubhouse, and just talking to other members in the group about options. And one guy messaged me privately and was like, how much to coach me, per hour or whatever. And I'm like, dude, I mean, everything that we talk about in the Clubhouse, there's no hidden. We're not holding anything back. Like, there's no secret mode. Um, I mean, I've seen some people say, oh, you gotta give away, what was it? You give away the secrets for free, but you sell the implementation or whatever. I don't know. I guess if that model ever presents itself, I would at least look at it. But um, there's no secret sauce. I mean, everything that I talk about here is everything that I know how to do. So, um, not selling anything. This is just fun, and I like to share stuff. So, uh, hopefully, people will like and follow and subscribe. And eventually, I would like to get monetized, and that would be exciting as hell. If I could just make some money, having Elon write me a check for putting these videos out and doing what I already was going to do anyway, that would be pretty cool. So keep my fingers crossed for that, and hopefully folks are, learning or enjoying or both. All right. Be good, y'all.